Well, hello and welcome to the Gauteng Infrastructure Summit. My name is Fifi Peters. Now, infrastructure investment is critical to get any economy going, and the Gauteng administration is very aware of this. Throughout the day, we've been hearing their plans to ramp up infrastructure development on the province. They've announced 31 mega cities that they are planning to build in order to get this economic activity going. Now, these cities would include affordable housing, quality education, as in schools. We're looking at hospitals, clinics, recreational parks, and shopping centers. The cities would also attempt to address the spatial inequalities created by the previous administration and allow people of different income groups to come and live, work, and play together in this integrated system. But building these mega cities will be no cheap task, and government has admitted that it will not be able to do this alone. It will need the buy-in from the private sector in order to do this. So it will be looking to leverage off the private sector's skills, expertise, but most importantly, capital, in order to fulfill its development objectives. So this forms the basis of the discussion that is about to take place, and helping me address all matters related to infrastructure funding and investments, I am joined by Barbara Creasy, who is the MEC of Finance. Barbara, thanks for your time. I have Pierre Fenter, who is sitting next to her. He is of the Banking Council. Boni Muvevi, who is the CEO of Gauteng Partnership Fund. John Oliphant, who is the chairman of CRISA and a member of the advisory panel for the UN Principles of Responsible Investing. And lastly, Opa Siabi, who is the CEO of the Gauteng Infrastructure Financing Agency. So, MEC, I am going to begin with you, since you do control the purse strings of the Gauteng administration. Recently, you did table the budget for the 2017-2018 financial year. If you could just refresh our memories regarding infrastructure development, how much have you allocated for that? Which projects will you be prioritizing? And where do you intend on getting this money from?
If we want to engage in some of the infrastructure projects that were presented by the Gauteng Infrastructure Planning Department, the finances required to do this would exceed those available in the provincial fiscus. Now, provincial government, 95% of its revenue comes from direct transfers from national government. And what that means is that we require permission from National Treasury if we want to borrow money, because obviously the easiest way to raise capital would be through direct borrowing. So we have historically borrowed for the Gautrain. We will, in this financial year, pay off that debt. But I think that you've already heard in the previous panel discussion from National Treasury that in a period of fiscal consolidation, there would be less appetite for direct borrowing. So it means that if we want ultimately to reach the 1.5 trillion infrastructure investment that is required by 2030, we've got to look at alternative and creative means to achieve this investment. We have got two agencies that are working on financing. Both of those agencies are sitting on this panel discussion, the Gauteng Partnership Fund and the Gauteng Infrastructure Financing Agency. I think what is important about those agencies is that over the last couple of years, they have been looking at innovative and affordable ways to construct investment using a range of creative mechanisms, triple Ps, lease agreements, build, operate, and transfer, those kinds of mechanisms. The Gauteng Infrastructure Financing Agency currently over the medium term is projecting to raise in the region of 37 billion from investors to finance 22 infrastructure projects So you can see that our intention is to more or less, at this point in time, it's a conservative estimate of more or less doubling our direct investment. But clearly, with the kind of projects that we've seen put on the table today, we are also interested in additional creative ways in which we could finance these. And I've already said that for us, it means that we have to be focused on the issue of value for money. We have to be focused on the issue of affordability, because ultimately these projects have to have a revenue stream, and ultimately the public purse comes into it somewhere. So I think that you've already heard from National Treasury. They're keen to make sure that when projects reach bankability stage, they should be financially sustainable. I think we are developing considerable expertise in doing those types of feasibility studies. So that is the work that we've done to date, and I think we feel that it's putting us on a very good footing to expand the scope and the reach of the investment projects we would like to put before investors.
Well, Bonnie, allow me to come to you directly, as the GPF will be leading the capital raising process. Now, in your interactions with investors so far, or first of all, let me maybe perhaps take it a step back. What kind of investors will you be reaching out to? Will they be local or international investors? And also, what will you be communicating to these investors to part with their cash and fund infrastructure projects, such as the ones that we've heard today?
We realize that alternative funding is key for us to be able to do more with government funding. So we have engaged with different institutions, and we have strategic partners that are on board already to the tune of about 2 billion. That are some of the partners that we have, which makes us have that footing for us to be able to leverage or continue with that partnership. Some of the issues that investors have raised and the risks around investment, it has been part of our model that we have to take into consideration those risks and try and mitigate those risks with government contribution. In terms of what we're doing now as in line with the mega projects, we have been packaging projects. Those 12 projects that we saw earlier that we presented, we have been looking at those projects to package them in such a way that they can be investor ready. We know that investors are looking for a return to their money and also to manage the risk. One of the key issues that private sector has raised is issues around commitment from government, and not just paper commitment and not just budget commitment, but money set aside and will be seen throughout the project so that it's not moved around into other areas. So I think those are key areas that we're looking at, making sure that some of the issues that investors are key in terms of participation, that we're able to package those projects properly for them to be able to consider those projects.
Prior to the 2008 financial crisis, banks were quite active in the area of human settlements. But since then, the participation of banks has waned somewhat, and also the introduction of tougher lending criteria has also demanded banks to be a lot more prudent in the type of financing that they approve. So, Bonnie has spoken about some of the investors he interacted with, speaking about commitment. They require a lot more commitment from government. Speaking from the perspective of the banks in the financial sector, what would it take to draw in active participation in the area of human settlements again?
I think, let me go back and correct you on one of your statements. There was a lull following the global economic downturn, 2007 through to about 2010. But since then, the volumes of mortgage finance that banks have provided has pretty much grown to the same sort of levels as pre the crisis. So it's not a lack of appetite. I think you must understand a bank doesn't build houses, we provide finance. In looking at more specifically at the mega projects to which you were referring and which Bonnie was talking about just now, I think absolutely key to the involvement of private sector is certainty. And I know that we have partnered with ASISA, which is the Long-Term Insurance Industry Association, and we've actually got 2 infrastructure specialists that have been talking to GIFA over the last while, and I think a lot of those conversations are very, very valuable because that's what builds the certainty. That master plan we heard about this morning is part of that certainty. I think the attempt by government to reduce bureaucracy through the red tape project is absolutely critical for private sector. So I think what we have in front of us is a well thought out plan. I think a lot of work has gone into it. What we now need to do is to translate that plan. My sense is that how do you eat an elephant? You eat it in pieces. And you need to take one project at a time and really beat that project to death, that the private sector clearly understands what the project entails. You actually get into deliberations with them where they can help restructure certain elements of that plan if they feel it's not bankable. And then I think, very important, the processes and the safeguards that Bonnie was talking about around commitment, because the difficulty with infrastructure, it outlives any politician. And politicians will come and go, but an infrastructure project can run over a 10 to 15-year period. And that master plan of 15 years is therefore absolutely critical. And we as private sector need to know that it cannot be tampered with. And that if we're going to put our money in, we're going to get our money out. And I think the expertise is certainly sitting in this room. I think Gauteng does have that expertise. It's been demonstrated by DPF over the years. And I think the private sector has partnered quite nicely with them. And I think going into these mega projects, they're going to be more challenging because they're just so much bigger and so much more complex. But I think we've got the wherewithal, and I think there is appetite. I think the one trick that's going to be required is, given Basel, it's all about term of money. So the banks have got very good transactors and lots of skills in that area. It's about how do we blend that finance? How do we move it after a couple of years rather than having to refinance, which pushes up costs? How do we move it into the long-term insurance industry? Because that's where the big appetite is, and that's why we've been partnering with ASISA to actually look at how we can actually tackle these things. And we've done quite nicely in the higher education area. There's been extensive talks with National Treasury and also with GIFA. So I think we're prepared. I think we just need to get on and do it now. You know, I think the planning has gone on for 2 years. Now it's a case of translating that into implementable projects.
And Opa, Pierre is speaking about implementable and bankable projects, and this is where you come in, because you have to go and sell some of these mega projects out there and make them bankable. So I'd like to understand how do you intend on doing this, and especially when operating in an economy like South Africa right now, where many say it's not growing at the desirable level. So how do you go out there, reach out to these investors, say you can bank on this project in these difficult circumstances in which you find yourself economically?
I think the issue of our situation now in the country, where really we operate from a big food, it's really to come up with innovative ways of being able to address that challenge. Mm-hmm. I think the issue of really spending money on preparing projects is key, because then in doing that, you're able first, in terms of shell projects, you are able to make the project to be able to, when during implementation, you are able to deal with those challenges that we will found of overruns, scope creep, and all that. So when you go implement the project, you're implementing at the right cost and at the right time. In terms of commercial projects, really straightforward, because if this project is bankable, the financiers, their interest is on their profits. So when the project shows good return of on their investment, they will put their money. What will be a challenge there will be the cost of that investment. And that's how really we shall be able to say, how then do you minimize the challenge of being able to reduce the cost of that investment in a way that the project itself is able to sell itself. So project financing for commercial project is much easier. The challenge that we're facing as government is shell project, where really, as MBC said earlier, that especially at the provincial level, where we don't have the power to borrow. it's how can we be able to pull our resources as agencies and also as department to be able to leverage on that to be able to do, to address our social project. Because unless we do that, in terms of being able to develop more social projects and be able to grow the economy, we won't be able to address the issue of poverty and unemployment. Yeah.
Mm-hmm. And John, from the perspective of responsible investing, would it be correct to say that it would be responsible for the private sector to come on board and support government in projects like these that aim to improve the quality of life of the majority of citizens, that aim to create jobs and to get economic activity going again? And should this element be enough to encourage them to come in and support such projects?
Yeah. Put differently, the question is whether there's appetite. And where I'm sitting, there is definitely appetite for institutional investors to participate in investments in infrastructure. So if you look at, the UNPRI, for example, it was launched in 2006, which really it encourages institutional investors to consider environmental, social, and governance issues in their investment decision-making processes. So most of the South African pension funds, and even globally, they are signatories to the UNPRI. In the context of South Africa, we've got what we call the Code for Responsible Investing, which was launched in about 2011, which further encourages investors to pursue investments in areas where there's a positive impact on social factors, there's positive impact on the environment, and so on. So the question then is to say, how does government then create sort of partnerships that are attractive to institutional investors? And in the context of South Africa, we're talking about, there was a reference made to ASISA. There's a total of about 8 trillion rands in savings in South Africa, of which 4 trillion is roughly pension funds, 2 trillion is voluntary savings, and then the balance is life companies. So if you were to argue and say roughly 5 to 10% of that should be allocated to infrastructure investment opportunities, the question then would be, is there appetite from government to package infrastructure opportunities in a way that are suitable for pension funds? And we have seen a good example where government was successful. For example, here in Gauteng, the Gautrain is an example of a partnership between government and institutional investors. In the renewable energy sector, which was launched by the Department of Energy, 192 billion of private sector pension funds have been mobilized to invest in that infrastructure. What is not really helping is when government policy is not clear. So the most important thing is that from the top of government all the way down to the bureaucrat in the department, there must be a consistent message that can even withstand the change of leadership or political leadership. Because when you bring private sector capital, you are actually saying you want to have a long-term partnership. An infrastructure project, typically, you're only getting paid your money back in over a 15-year, 20-year term. And we need to make sure that we build frameworks that are sustainable in the long term. But from where I'm sitting, it's almost a marriage made in heaven. There's appetite from pension funds, there are long-term investors, and there's a need for capital where there's a high social impact. In my previous role as the head of the Government Employees Pension Fund, at the time, there was a 4-pillar strategy that was adopted by the GPF, where it said that, firstly, investments in economic infrastructure, investments in social infrastructure, the greening of the economy, and enterprise development. And you fast forward that and you look at what the PIC has been doing in the infrastructure space, because at the time, the allocation was 50 billion, and that really gave the PIC the power to become a leader in social housing. They've made significant investments in energy, in education, edu loan, and so on. So there's clear appetite, but we need to ensure that there's also consistent message from a policy and government point of view.
So you're talking about strong appetite there, but obviously that appetite needed to be, or the package to buy into that appetite needs to be a little bit sweeter. And this is important because the cost of bringing in that appetite now has recently increased, and that follows the recent ratings action. So there's going to be a lot of sweetening that needs to be done from your part, Bonnie, and I'm interested in how you are going to address this, because now the risk premium of of bringing in the private sector has increased following the recent ratings actions. How will you sweeten the package to get the buy-in from the private sector here?
I think maybe just to answer the question a little bit differently, one of the key issues that John has raised is really about the structures or the models that we create in order for investors to participate. Apart from the instruments that one actually uses, we need to match our mega projects with the correct instrument. We need to create the right structures for investors to participate. Underpinning that is government participation. Government participation beyond subsidies, beyond project level. We should be looking at, if you talk to any investor, you say, especially international investors, they'll say, we are keen to participate, but give us a guarantee. We know that in our space at the moment, we don't have that room to be able to issue guarantees for most of our projects. So the question is, what else do we have? What other credit-enhancing instruments can we put forward as government that can allow investors to give them that comfort? If you look at any investment, a private sector, it's not only about money, it's also about the partners, it's also about how we implement. So we need to look at that entire value chain and make sure, even procurement, the issue around how did these mega projects get procured, we get asked, because they see a lot of risk around all those factors. So we need to look at the entire chain and see how we can mitigate those risks, potential risks that are there. I'm glad to hear that local investors are willing to participate. I think from the previous speaker, there was the issue around what's the impact of this junk status position that we are in. Normally, there are a few investors that would like to participate. I think that was said. And also, the cost of funding becomes a little bit higher. And your return expectation also has to be a little bit higher. If you look at some of our projects, it's good that they've got a mix of both social and commercial, which makes the returns on those projects a little bit more favorable. But they are also strained by the fact that there's that social component that has to come on board. So I think what's key is really about how we design our models and structures where investors can be able to participate and match with the right financial instrument.
I was actually about to come to you. I couldn't help but notice everybody nodding here at the panel as Bonnie was speaking about creating those structures. But Pierre, add to that if you will.
What Bonnie's also trying to say is hard, and he carries quite a big responsibility because it's about blending 3 levels of capital together. Your commercial banks, your long-term insurance and pension industry, and then your DFR money. And what you don't, the last thing you want to see is the eyes of the blanket being picked out by DFR because it can provide concessionary money. It's about how do you get, and I think that probably the bigger, we heard all day about the challenge of integration. It's also the challenge about how do you integrate 3 different groups of financiers where you blend their funds to actually make those deals reasonably lucrative for all concerned and level that playing field, but at the same time, very importantly, how do you do it and ensure that there's competition? Because I think competition is what makes financiers sharpen their pencils.
And MEC, if you'd like to add to that, and particularly regarding the issue of that certainty and the structures that people and investors can actually commit to.
I think the Gauteng provincial government has been very aware over the last 3 years of the importance of providing certainty for investors. And I think that is why we have put as much effort and time as we have into developing this 2030 infrastructure master plan. Because we understand the lead in time with regard to infrastructure projects, and we also understand the concomitant risks that both private and development finance institutions would face. I think that where we are now, that we have costed that plan, is that we are in the process of developing potential financial models. And we're doing that both on the basis of our existing experience and also, I think, the new partnerships that we are developing. We already have partnerships with the Development Bank, with the PIC, with the Banking Association, and as has already been mentioned, with the Association for Savings and Investment in South Africa. And I think that through those relationships, including our own partnership with our own provincial banker that is a commercial bank, we have the financial expertise to be able to put together a range of vehicles that we would then be able to say, for this kind of project, this would be the suitable investment vehicle. I think what we want to move away from is every time we have a similar kind of project going through the feasibility study again, we want to be able to put together investment vehicles that everybody with expertise agrees are suitable for particular types of infrastructure financing. And I think the other thing that we're very sensitive to as provincial government is we don't want to start competing against ourselves because obviously there would be some infrastructure projects that might be seen as more attractive than others. And that's why integration is not only important in terms of infrastructure delivery, but it's also important in terms of financing mechanisms so that we don't compete against ourselves and then land up with some projects that might be regarded as Cinderella projects.
In terms of going out there to solicit this funding, how will you overcome perhaps some of the commentary regarding the fact that, okay, we still have one more ratings agency that is set to announce its review in South Africa, that is Moody's. It's still a major risk, the fact that the increase of, or the cost of borrowing here in South Africa is higher, despite the increased appetite to participate in these projects. So how is this such scenario regarding our sovereign rating making your job more difficult to attract this financing?
I think the issue of the way government projects are, MEC said that we have a pipeline of projects. And luckily, as government, we forced by regulations to always go to the market for projects to be able to woo in both developers and financiers. And in that way, that element of competition into the market, it helps us really to deal with the issue of saying how best could we be able to get the best financing of our project at the lowest cost. Earlier, we heard that there's a lot of money. I think the MEC of Sumasalon said that there's a lot of money in the country. What is lacking is the readiness of the projects. So we bring in projects into the market, we're allowing competition in terms of being able to say who will be best developer and financiers to give government best value for money. And in that regard, it's a manner that, in a way that we're applying to use legislation to be able to get the best product into the market. Except that you just have to really build, as part of your costing, be able to build in all those risks that are there in terms of our taxes at this point in time. So I'm saying that it is a hindrance in terms of our taxes, but at the same time, the manner in terms of implementing our project, going through the market and allowing competition is another way of being able to manage that concern. But it's something that you cannot control out of that process. Yeah.
Mm-hmm. And John, your views?
So in the context of South African pension funds, there is what we call Regulation 28, which defines how the money must be invested. So for example, Regulation 28 will say, 15% of the money can be invested outside South Africa, 5% into the rest of the continent, and then 80% has to be invested here. So on a relative basis, then the question is, from an asset allocation of that 80%, what do trustees find attractive? Do they find investing in listed companies on the JSE attractive? Are the returns performing? So what you need then from a province point of view the way you package project, you are actually competing with other investment opportunities within the economy. And we need to make sure that those investments are attractive in that context. The second benefit would be whether these investments bring a diversification benefit. Because you're not only, from a pension fund point of view, you're not only managing the return expectation, but you're also managing the risk. So you need your portfolio to be diversified in a way that when one asset class outperforms, maybe the other one is underperforming and so on. So if you look at the context of infrastructure, it has been demonstrated, even in Australia, where most of the pension funds are overweight infrastructure, it has been demonstrated that it brings diversification benefits to the investment portfolio. So it's uncorrelated to the listed markets. And we've seen that even, during the 2008-2009 financial crisis, the best performing asset class in the CalPAS portfolio, which is one of the top pension funds in the world, was their social housing investments, where they run a program where they lend, to the teachers within California and they repay to get housing. That was the best performing asset class in their portfolio. In the context of South Africa, if you look at the normal pension funds and what has been happening in our economy, let's take, for example, an ordinary teacher or a policeman. They are the members, for example, of the GEPF. The GEPF combined, it's got about 1.5 trillion rands. But the very same members cannot afford housing. So the question then is to say, how do you find the right balance between consumption today versus deferred consumption in the future? And how do you balance that with the return expectations? Because in the end, if you were to get money from a pension fund and Bonnie makes a bad investment and you have to write it off, it's not good for the country, because you want that investment to be sustainable so that people can retire comfortably. Then on the issue of the role of government in terms of consistent messaging, and I know this is a controversial issue. Let's take example, the e-tolls. You get private sector investors, they invest through Sanral bonds, and they believe in the story that the money will be paid back. Then you end up, and then at some point people resist e-tolls and it becomes politically inconvenient. Then the question then, how do you deal with it in a way that the investors that backed Sanral through buying the bonds are not worse off? So it's very important when decisions or when people change decisions and say, we know what, maybe we did not consult appropriately, we need to change, to always consider the investors behind it, to say we shouldn't be, in the context of policy change, we should not hurt our ability to borrow money from the markets. Because in the future, when you come up with a new idea, you'll end up with the issues that have been raised, because people will say, well, no, let's wait and see whether this policy will withstand all forms of pressures in the next 5 years or 10 years before we can put in money. So it's a balancing act, because all the investors want is security. Because in reality, that has to be consistent with their fiduciary responsibilities in being able for people to retire comfortably in 20 or 30 years' time.
Well, it's a tough balancing act, as we've seen so far, but we are going to take a quick break, a 2-minute recess for us to just process some of the thoughts that have been shared here, and just for others to maybe take a sip of water, and we will continue our live recording of this broadcast special. Well, we are continuing our discussion here at the Infrastructure Summit in Gauteng, and the discussion is focused on funding and investing in some of these infrastructure projects. Now, for any relationship to work, there needs to be trust. Trust forms the cornerstone of any form of relationship, be it personal, but especially one between the private sector and the public sector. Now, MEC, allow me to come to you. In terms of trust, many would say that the actions in recent weeks that have transpired in the economy have plunged business trust in the government to all-time lows. I'm interested in how you intend to restore this trust, particularly in the Gauteng administration, and give investors that surety and certainty that, right, their money is safe and there will be policy continuity and no rash decisions will be made regardless of whose prerogative it was to exercise those decisions.
Well, I think that already you would see that there's considerable interaction taking place between government and the private sector at other levels of government. Here in Gauteng, I think we have been consistent over the past 3 years in building our relationship with all key aspects of the private sector. And obviously, in these difficult times, it's something that we are more committed than ever to put energy into building that relationship. From the perspective of the province, I think that we feel that we've got a good track record with regard to triple Ps. The Gautrain was one of the largest public sector investments in its time. And I mean, as I indicated earlier, we are now in the process in this financial year of paying off that loan. I think it's been a very successful venture. The research that we have done into the impact of that venture has indicated that whereas when we began the project there was a court case for every kilometer, what we now have is hundreds and hundreds of millions of rand of investment for every kilometer of that rail. And I think that in a way, when you have successful projects like that, they speak for themselves about the willingness of this government to enter into those partnerships and about our capacity jointly with the public, with the private sector to carry them through. So I think that that is a very important legacy and track record. GIFA already has, as I said, a pipeline of 22 projects that are worth 37 billion rand. We are in the process of reaching financial close in the first 5 of those projects. So I'm optimistic. Perhaps one should say in this climate, cautiously optimistic, but more than cautiously optimistic that we have the capacity, we have the plans, we have the costing, and I think most importantly, we have the political will to follow through on the commitments that are made by our Premier at a public level with administrative capacity to carry them out.
Well, Bonnie, I'm going to come to you now because obviously trust works both ways, and the private sector have also been perpetrators of this abuse of trust through behaviors such as collusion and the forming of cartels. So I'd like to know how will there be systems in place to ensure that, you know, the investors that you go and reach out to, should they be found to be engaging in behaviors like this, that they are called to order and that they are dealt with?
Thanks for that. I think the Premier has made it, you know, quite clear that issues around collusion and corruption and how we need to deal with this in the province. In the mega projects context, I think the process has been very open. Human Settlements had announced publicly or invited private developers to submit proposals that went through a process that is quite open. And even the selection criteria that was used, I think, is there. In terms of other types of collusion between contractor and costs and issues, there are areas that we are very aware of that we need to monitor. I think for us, the issues around monitor, we need to strengthen our monitoring and evaluation in order for us to be clear. I think earlier we talked about issues of material costs that are quite a significant number in terms of projects. We need to look at some of those issues and really find a way of managing those risks.
And Opo, will you follow a similar model to ensure that, you know, you do catch those fronters who manipulate their scorecards in order to get projects like this at an early stage? Because many a times what you end up finding is the wrong kind of people getting these projects. You get shoddy work being produced and you get the administration in a situation where it has to sort of spend more money to maintain things that should have been done correctly the first time.
Thank you, Fifi. I think the issue of really investing, I think I emphasize this point that the issue of investing in project preparation is key. Because if you implement an idea, you'll run the risk of appointing people don't know what they're supposed to be doing. You didn't scope your project correctly, and you don't even know what cost the project should be. If you prepare properly for a project, all those things that are catered for, you know upfront what expectations you get in terms of the cost of the project, what type of skills you require to implement that project. And during adjudication, you are able then to deal with those issues. I think the issue, the Triple P project give us an opportunity because while there's a provincial leg of an input, we also have national processes where also what we have done at the provincial level get tested at the national level. So there's that ability to be able to cross-check between what province has done and what national has done. So I think from where we see that through this process, we're able to get the right skills and developers to be able to implement a project at the right cost. So also looking at the best mechanism in terms of financing models that are applied for this project. So really, this process that we're following, it really gives us comfort that when decisions are made, we're really appointing the right people to do the job. Thanks.
Okay, so I'm going to take the opportunity right now just to open up the discussion to the floor. If anybody has any questions, I would ask that you stand up and you introduce yourself and you state your organization and exactly what question you have. And perhaps more importantly, if you have any proposals or suggestions as to how better private-public partnerships can work, if you could raise them also.
Thank you very much. Good afternoon, ladies and gents. My name is Tapelo Maleke. I'm representing the South African Youth Chamber of Commerce. I'm encouraged by the discussions, and I hear the focus is more on the certainty of investors. However, at some stage, we need to also have a discussion around certainty around the participation of SMMEs in this whole thing. I'm not opposed to the discussions about mega, everything mega. But in that mega package, we must be very clear in terms of how these upcoming entrepreneurs, particularly the youth in this sector, because this sector has been closed for quite some time. Even now, it's quite difficult. We are trying to unlock through various programs, but it will be more encouraging that we are able to unpack these mega discussions and to say, when you talk about the funding models that the MEC is talking about, it must be clear in that model to say, this is how the participation of the SMMEs comes in as a benefit factor for the investment, particularly for our public investment. There should be some way of leverage where we say, this is what we call a return on the public investment in these projects, because for the private sector investment, surely it's profit that they want. But going forward from the public investment point of view, we should be clear in terms of a package that says the return is the multiplier factor that says these are the numbers of SMMEs that are going to come out of the program and in turn create job opportunities, because if we talk mega that does not show us how we are going to create such opportunities, then it's a pie in the sky. Thank you very much.
Well, that was quite a mouthful of a question there, so I suppose it is very good that there isn't another question. We are running out of time, but he addressed SMME participation, and Barbara, I would like to bring this to you. Certainty about participation of SMMEs. How can upcoming entrepreneurs engage in some of these projects? Obviously not on a mega scale, but what participation can they play in these projects?
Well, I suppose the question really talks less to the financing and more to the delivery. So I think the first thing that is important to say is that in all projects that are directly funded by the state, where the project has a value of more than 30 million rand, it is now compulsory, as from the 1st of April, that 30% of that project has to be outsourced to small and medium enterprises. And from the side of Provincial Treasury, we are already working with our infrastructure departments on looking at how will they make that effected in reality. One of the big issues that one has to deal with, apart from setting targets for departments to fulfill that commitment, is to make sure that we are also doing supplier development. Because there are many entrepreneurs who would want to take part in construction projects, big construction projects, who require capacity development. And I think that is something that we're working together with infrastructure development and human settlements to look at questions of supplier development. What has been exciting for me, because I have had many, many interactions with large-scale private corporations in recent times, and that includes the banks, the insurance industry, the mining industry, is the appetite that I have seen there to include smaller suppliers in the supply chain. And one of the things that we are doing through Provincial Treasury is setting up partnerships with some of the big industry and financial players to say, we have got 7,000 township entrepreneurs on the central supplier database of the Gauteng provincial government. How do you open up your supply chains to those entrepreneurs? How do you open up your supplier development programs to those entrepreneurs? And similarly, where the private sector has got small entrepreneurs that they are working with, how do we put those small entrepreneurs onto the central government supplier database? So I think that there are interesting possibilities that are going beyond ideas at this stage into real programs of supplier development empowerment and real programs of absorption into one another's supply chains.
And Pierre, just really quickly there, in terms of access to funding for a small player who wants to participate in a project like this, what kind of criterion would they have to meet in order to get that funding?
What our banks have done, and we've also done the same thing in Banking Association, is we've actually created dedicated divisions that actually deal with small enterprises, and the guys are building product around that. Having said that, though, the banks are not particularly good at dealing with micro enterprises. I must be very honest with you. We don't have these structures to actually deal with it. I think Nurture played a very good role in terms of dealing with small contractors. You know, it's almost like the agricultural sector. We're not good at dealing on the ground with subsistence farmers or very small-scale farmers. We would rather lend the money through wholesale money into an entity that can actually create that. So in agriculture, we've done the same thing through the cooperatives that actually lend money into the rural areas, to the small farmers where they're producing stuff. And I think the same thing with small contractors. We're not geared to deal with emerging contractors. I must be very honest, we don't have the infrastructure. We're trying to build the skills with our dedicated divisions, and they're building the product and the services around that. But I think a lot of that it will be driven through intermediaries.
Some brutal truths there coming from you, Pierre, but I'm going to ask our panelists for some closing remarks right now as we wrap up this discussion regarding funding infrastructure development. Opa, let me begin with you, and if we can just take it from that direction.
Look, really, my conclusion is that let's invest in project preparation, not only put money for implementation on projects. Secondly, private sector must just engage government on innovative models or mechanisms of financing projects, because especially our financial institutions, they know what type of project or appetite do they have for project that they want to fund. And they can be able to help us in that when we are doing our preparation, we deal with those issues so that they can be able to fund our projects. Thanks.
John?
I think from my side is that, I'm quite excited that a summit like this from a government point of view and inviting private sector to participate, I think it's opening an opportunity for dialogue, an opportunity to provide inputs. In terms of investments, I think there is appetite, but we just need to ensure that there's a consistent message and, and continuous engagement with the savings industry. And hopefully both government of Gauteng and the savings industry can find one another so that, there will be clear participation in terms of investment opportunities within the province.
Thank you. And Bonnie?
I've got two key issues that I'd like to just highlight. I think the first is within government there's a lot of money, and I think we need to coordinate, or we need to plan better so that we can be able to, I think there has been discussions earlier from the Premier and the MEC indicating that we could pull a lot of money together to be able to fund our social infrastructure. I think that's one, in terms of alignment and coordination. Two, I think as GPF, we have started creating platforms for investors to be able to participate. And we are looking at a rental fund that if there are any investors that are willing to participate, I know we've got other post-summit engagements that we'll do. And we're also looking at creating an infrastructure mega projects fund that's fairly at an advanced stage. So if there are any investors that are looking at participating there, we're also looking further down the line to list a bond within this space. So I think there's a lot of engagement and platforms that we've already started putting in place for investors to participate. Yeah.
I would agree with. I would just like to add one other thing, and that is, you spoke at length just now about junk bond status. I think it also creates opportunities for us as South Africans. We can either sit back and just let our economy trundle along at very low economic growth levels, and we can all bemoan the fact that we're in junk bond status. Or we can all get up and stand together and actually turn it around. Korea did it in 2 years. There are some countries that have been sitting in junk bond status for the past 15 or 20 years, and they haven't got out of there yet. And I think South Africa, we had our 1994 miracle. I think we were in junk bond status a dozen years ago. We turned it around in 5 years. We can do it again. But it's going to require partnerships, and I think infrastructure is absolutely key to driving that growth and creating the jobs.
And creating the jobs. And Ms. Creasy, your closing comments?
Well, I think that we've heard the message on certainty and trust. We've heard it loud and clear. We're excited from the side of the provincial government on the possibilities for partnerships that we've heard here today. I agree with the previous speaker. Let's stop complaining. Let's get down to business.
Well, let's get down to business, and that's where we wrap our discussion here at the Infrastructure Summit in Gauteng. Our panelists speaking about their excitement of projects like this, and saying that in order for them to really engage in these private-public partnerships, trust and policy certainty being two very critical elements. But thank you for watching, and we look forward to the discussions further.